Hi guys, this is Costello Atanasiou. I am gonna talk today about the drop in the stock market today and the questions everybody asks: is this a start of a bear market or not? Okay, so Dow Jones went down 276 points or 1.6%. It was as low as 400 points actually by 11 in the morning, then again at 3:30, but in the last half an hour recover some lost ground. Okay, um, let's see what exactly it's a bear market. Okay, let's see the definition. Okay, so a bear market from the fundamental analysis point of view, the economy, not the stock market, needs to have two negative GDP for 2 quarters in a row. Okay, so that's how the economy is defined the beginning of a bear market. Okay, we didn't have that yet. From a technical analysis point of view, market needs to drop at least 20%, then to stay there for at least 6 months. Okay, so I have my own method. I'll describe it immediately. From a technical point of view, of course. Let's see, go back to the Dow Jones. Okay, so pretty much what I'm doing, I'm looking at the weekly chart. Okay, let's get the weekly or 5 days, the same thing again. Let's go to arithmetic first. Okay, so this is a weekly chart, not a quarterly, as I say here. And I'm using moving averages. More exactly, I'm using EMA or EMA 25 crossing with EMA 50. So I looked back in the last 20 years. These values worked pretty well. Okay, so I look first at the data, then I best fit it, and it looks like it's still performing very well. Okay. So pretty much from this point of view, from my method, the bear market in 2008 starting somewhere in here when I see the crossing, so at 1200, 12,000 on Dow. Okay, and the new bull market started here again at 10,000. Okay, so and we're still in the bull market right now. I have a little bit of whipsaw in here, and I decided actually to go a little bit longer for 6 days instead of 5, just to get rid of that. Um, so and let me see. Actually, my favorite index is S&P 500. To be honest, So again, I'm looking for crossover between EMA 25 and EMA 50. Okay, I don't know why this doesn't work at the moment. Let's start comp. Okay, this is the Nasdaq. Okay, so I'm looking for this bullish crossover for a beginning of bull market and for a bearish crossover here. And in addition to that, I also added this is a single moving average. It's 120 again by testing, looking back in the past to see which one fitted best. And so pretty much what I'm looking in a bear market, I need to see this the negative, the bearish crossover, then again to go below the single moving average 120. Okay, these are approximate values. You don't need to take it literally. Okay, so from this point of view, if you look, we're not there yet. No crossing over. We're still above the small 120. However, you can see here the market doesn't make a higher high. Which is a bit troubling for quite a long time, didn't manage to make a higher high. And again, this is the uptrend line, which moves pretty much closer to MySMA 120. So I can, you say, okay, you guess that, you looked in the past, okay, whatever, this, why should I trust this moving averages? Why not? You can choose any moving averages you want. Okay, so let's have a look back. Let's try again. S&P 500 is working. Okay, now it's working. Okay, so unfortunately the data is limited. So for 6 days, I'll go to 2005. Okay, I want to see back, further back. Let's see if I go to 9 days instead of 6 days. Okay, now I have also the bear market from 2000 to 2003. Okay, I need to adjust the EMA. So I was 6 days before, now it's 9 days, which means I need to decrease them by 1/3. So which is like what? Say 34 in here. Okay, half of this will be 17, and this will become 80, right? This became 80. So it's pretty much the same. And let's zoom in a little bit to see. Okay. So, and let me change this to line. It's a bit distracting for me, at least. Okay. So we have this bearish signal in here. Okay. You see some moving up, again down. The thing is, I don't want. People are fooled by this moving up, and they say, okay, the bear market, it's over. You know? So using this moving average is actually, I'm on a safer side. I'll go in only when the trend really moved up. So here, so we have like 1020. So the exit was around 1300. You can short it in there, and you can go back at what is that, 1000. So it's 300 points, but percentage wise is like for 30%, right? Something like that. Okay, let's see. So this is the bull market in here, and when turned back in 2008, again, here is the negative crossover. Actually first moved below the small 120, went back again, but meantime we have this crossover. Okay, so by here for sure, like here at 1240, for at least I was sure that that was the bear market, but technically the signal was somewhere in here. So again, like around 1300. Okay, the signal on the upside was not very good, but not terrible either. So it was again 1080, so another 300 points, percentage was good. The reason I think is because we had this drop very, very fast from 800 to 660, then again very fast move back. So this is pretty much an anomaly. If we skip this part, actually the entrance was also good. Anyway, assume one went in here, 1200, sorry, somewhere in this area. Okay, when there's the bullish signal for sure, and as you can see, you could safely stay, no problem. We had this drop, but no crossover. Okay, right now we're still in bull market, so that's my assessment at this point. We need to see this EMA 17 in this case moving below EMA 34, okay, and then again a move below the SMA 80 in this case. So somewhere in here, let's be safe, 1800. If it goes to 1800, below 1800, that's definitely that's the bear market. Of course, you miss the 300 points. Who cares? I mean, the thing for me, at least, it's more important to be safe. safety it's very important. So from 1800 I can go easily, probably I'll have like, we'll go like 700 probably. I don't know, I don't want to guess how bad we'll go, but if it goes to 1800 will be a very strong drop somewhere in this area, 1200, 1000 maybe, you know, you never know, but will be in a matter of months, a few months, you know, we'll see this drop as harsh as this one in here. Okay, so that's my assessment today. Okay, let's look at the, so we're still in bull market, that's the idea, but now I made a mistake. I need this trend line here. Okay, if you look at the trend line, it's again 1800, somewhere in this area. It's not a precise science, you know, but again, if it goes here, it's no turn back. It's not like here. Okay, so when went down to, actually it doesn't look, 1866 I guess. Okay, it had a chance to recover, and it did recover, was no problem. We didn't have any bearish crossover in here. Okay, but if it goes again back like here, I'm pretty sure this will cross over, will go below the SMA 120 and below the uptrend line, and it will definitely be in a bear market. Okay, so that's it for today. I'm gonna make another video when if we get closer to this area, and definitely if you enter the bear market. Okay, be safe, trade safe, all the best.